Today we'll be talking about 5 things you need to be qualified for a mortgage. While ideally shopping for a house, you would need to start your home buying process in a lender's office, not in an open house. Potential buyers may benefit with consulting with a lender by obtaining a pre-qualification letter. First, they have an opportunity to discuss about loan options and budgeting with the lender. Second, the lender will check the buyer's credit to make sure that they qualify and to see if they will encounter any problems throughout the process. Third, the buyer will learn the maximum amount they can borrow, therefore will have an idea of their price range. However, all buyers should still consider looking at their own budget and see what they're comfortable paying, and not automatically go for the maximum amount that they can borrow. Lastly, home sellers are more willing to negotiate with buyers that have their pre-qualification letter, because this shows that they can obtain finance. A mortgage pre-qualification is a useful estimate to see how much you can afford to spend on your home. But a pre-approval is much more valuable because the lender has already checked your credit, checked all your documents, and now you are approved for a certain amount. This pre-approval typically lasts for about 90 days. So whenever you get your pre-qualification, make sure that your search for a home is within that 90-day span. Final loan approval occurs when an appraisal has been done and the loan has been applied to a particular property. Number 1, you'll need proof of income. No verification or no documentation loans are a thing of the past. So all borrowers will need to be prepared with W-2s of the past 2 years. Recent pay stubs that show income and year-to-date income. Proof of any additional income such as alimony, bonuses, and your 2 most recent tax returns. Number 2, proof of assets. You will need bank statements, investment account statements to prove that you have sufficient funds to pay for closing costs, the down payment, and cash reserves. While a conventional loan can be 3% down, 10% down, or 20% down, depending on the loan program. If you receive money from a friend or a relative to assist you in any down payment, you will need a gift letter to prove that it's not a loan. Number 3, good credit. Most lenders today reserve the lowest interest rate for the customers that have a credit score of 740 and above. Below that, customers will have to pay a little more in interest rate or pay an additional discount point to lower the interest rate. FHA loan guidelines have tightened over the recent months too, so that customers with a credit score of 580 and below may have to pay an additional down payment. Most lenders require a credit score of 620 in order to qualify for an FHA loan. Lenders will often work with customers that have low credit scores, often by helping them in ways to improve their credit score. Number 4, employment verification. Your lender will not only want to see your pay stubs, but may also call your employer to make sure that you are still working and check your salary. If you have recently changed jobs, the lender might want to contact your previous employer. Lenders today want to make sure that they are loaning to borrowers with stable employment. Self-employed borrowers will need to provide significant paperwork concerning their business and income. Number 5, documentation. Your lender will need a copy of your driver's license, social security number, and a signature allowing them to pull a credit report. Be prepared at the pre-approval session and later to provide any paperwork that the lender will request. The more cooperative you are, the smoother the mortgage process will be. Once you have gathered all the required documentation, it is time to look for the best mortgage interest rates in your area. The bottom line, consulting with your lender before searching for a home can save you a lot of heartaches. So remember, gather all your paperwork or print out some bank statements from your online bank account before you meet with your lender or go house hunting.